March the 2nd, 2023. As you're looking at the stock market, this is overnight trading. The markets will reopen in the morning. But this is West Texas Intermediate crude. And it closed out Friday at around 75.50 or 60 per barrel. And now it's jumped about $5 a barrel because of a couple things that have happened. That's over the weekend now. So you're going to see a jump in gas prices. It may be a good time to get your car filled up if this hasn't already been reflected in the price at the pumps, guys. But what happened, if you look back here on Thursday the 30th, the Burisma-Biden administration, I'm not saying that lightly, broke a deal with Saudi Arabia. Saudi Arabia had already signed a deal with Russia and China, going in with BRICS and many other nations, because they were sick of the control and the abuse of the power of the petrodollar. And Biden had been collapsing everything since he's been in office. Now, you've got to look at this for what it is. Outside influence has an effect, but inside destruction has a much greater. And so you think about, well, will Russia or China attack the U.S.? Unless there's a nuclear exchange, they really don't have to, because their people, or not their people, but the deep state's people are destroying it inside for them. They don't have to. It's being done day by day, very quickly. And it's as if the kings of the earth now are going against the head of Babylon. We'll see how that works out. But again, we're at 80.76 per barrel. And Joe Biden broke a promise with Saudi Arabia. He said that he would restore the oil that was in our strategic reserves that he pumped out right when he came into office. Remember, depleted those? And then Thursday he said, no, we're going to wait on that. That was the straw that broke the camel's back, literally. They signed up with 10 other nations and to drop their output by millions of barrels, per day. So when you have less on the market, the price is going to shoot up, right? Not only that, the U.S. more than likely will not get very much of what's left. They want that. They want everything taken down. So again, if you haven't filled up your vehicles, and if the price has not been reflected yet at the tank or the tanks, then you may want to do that, because I don't know how this is going to work out as the markets continue. But the news is just coming out on what I'm telling you about, and I want to look at that just a little closer. Now, this is updated from Zero Hedge. It says oil surges in early trading after OPEC plus surprise unipolar world challenging production cut. Updated 1800 Eastern Time. That would be 6 p.m. As one would have expected, oil prices are surging at the futures open, with WTI up 7%, near $82 a barrel. Its highest since late January. Now, what we were looking at was at 80 plus, but I had seen it at 81 just an hour ago. So that's been going back and forth. Plus, there's a 15-minute delay on the markets as we were looking at them on CNBC. Here's a chart that you can see the sudden rise. And we've seen a break at the gas pumps. Really, guys, it was around $72 a barrel, not maybe a week or so ago. Now you're going to see that almost $10 jump, and you can see it at the pumps. But it says, additionally, less than 2 weeks after slashing its 2024 Brent price target from $100 to $94, Goldman done a full 180 and late on Friday raised its 2024 Brent forecast back to 100 and 2023 oil price targets to 95 from 90 and from $95 previously. That's because they knew when this was cut off, all of this supply from overseas, the price goes up. It happens in any market. Check this out. 9 members of OPEC plus that's the new group, announced today a surprise voluntary collective output cut totaling 1.66 million barrels per day, which will take effect from May until the end of 2023. I don't think relations will ever be retied. I think that we are too late in the game. It says, as we have argued, OPEC Plus has very significant pricing power relative to the past, and today's surprise cut is consistent with their new doctrine to act preemptively because they can without significant losses in market share. As we already assumed that Russia's cuts would extend into 2023, we are lowering our OPEC Plus production in 2023 forecast by 1.1 million barrels per day. Incorporating this significantly lower OPEC supply or OPEC Plus supply, slightly lower demand, and the modest French SPR release, we have nudged up our Brent forecast by $5 a barrel to $95 a barrel. And for December of 2023, up to $100 versus $97 for December 2024. I would be surprised if it holds together that long, guys, at that price. Finally, earlier today, we noted that heading into this OPEC Plus cut weekend, West Texas Intermediate shorts had trimmed the total exposure by the most in 7 years. However, as the next chart shows, there are still a lot of shorts left to cover. You can see this right there. Guys, in here it says the Financial Times reports that according to people familiar with Saudi Arabia's thinking, Riyadh was irritated last week that the Biden administration publicly ruled out new crude purchases to replenish the strategic stockpile that had been drained last year as the White House battled to tame inflation. How do you tame inflation? By raising interest rates and the cost of everything, like it's doing right now with gas. He, as an aside, he said that we joked just a few days ago that contrary to earlier reps and warranties that the U.S. would start refilling the strategic reserve if oil dropped below 72, and we were right at that, $72 and change, that this won't be happening anytime soon, if ever. Now, what it is not saying here, and we may can read it in between the lines, maybe not, is that the U.S. is broke except for their fiat petrodollar, right? And it has nothing to back it. And when you can't even switch it over to an oil backing when you've depleted all of that. But so maybe it's not just Joe saying they're not. It's that Riyadh has told them, you can keep that petrodollar if you don't have gold or silver or something that we can deal with, the yuan or whatever it is. We're not dealing with the petrodollar anymore, Joe. Get over it. We've been trying to tell you. And they're not really dealing with Joe, and we know that. That's just for the conversation. But they've had enough. And some of the kings are turning against Babylon. Energy Secretary Jennifer Graham's statement that it could take years to refill the reserve sent oil prices briefly lower. The White House had previously offered reassurance to Saudi Arabia that it would step in to make purchases for its strategic reserve if prices fell. Again, they may not can buy it. They may not want to buy it. It's all about destruction from within. Of course, there's always the smartest guy we know for Biden to rely on energy policy. Is that in it's kind of a joke, but is the DOE or Department of Energy still subletting Energy Guru laptop from Burisma? Says a spokesman for the National Security Council at the White House has responded to OPEC Plus's decision to cut crude production by 1 million barrels per day. It's actually 1.66, by saying that output cuts aren't advisable right now given market uncertainty. OPEC is telling them, we don't give a damn. You guys have stuck it in everybody's face for way too long, and Babylon is going to fall. He said, adding that the White House will continue to work with all producers and consumers to ensure energy markets support economic growth and lower prices for American consumers. That worked out really well, didn't it? Halima Croft, head of commodity strategy for RBC Capital Markets, said Saudi Arabia was staking out an economic strategy independent of the U.S. After a deterioration in relations between Riyadh and Washington during the Biden administration. Now listen, this is exactly what's happening. In quotations, it's a Saudi-first policy. We're no longer bowing to the petrodollar and the destruction. They're making new friends. That was not in quotations, by the way. Back into quotations. They're making new friends, as we saw with China, referring to the recent Beijing brokered diplomatic deal between Saudi Arabia and Iran. The kingdom was sending a message to the U.S. that it's no longer a unipolar world. That unipolar means dominated by the petrodollar. It's not there anymore. It's over. Babylon, which that was Babylon's weapon, the petrodollar, is gone. Now, what will that do to the rest of the markets? Think about it. The large companies that own the large, like the gas stations you see on the interstate, the different ones, the big ones, they will suffer. Their employees will suffer. People will be able to travel less. And, of course, they're going to say, well, this will be good. You're going to need a Tesla. They're going to have it down to where nobody can afford to do anything. They're weakening the nation. It's like someone pulled the plug out from under us and everything's draining out. Everything. It says Saudis have joined the Shanghai military and security bloc as it embraces China on April 1st. In a huge Chinese push by Aramco, world's biggest oil producer to build a $10 billion petrochemical complex. This was March 27th. We asked this question last month. Who cuts first, OPEC or the Fed? Well, now we know. OPEC did it for them. Now, how will this affect Powell's initiative as far as continuing to raise interest rates? He probably will double up on that, guys, because then it just accelerates the decline of everything. Other members such as Kuwait, the United Arab Emirates, and Algeria have joined in the reduction efforts. Previously, Russia has pledged to cut its crude oil output by 500,000 barrels per day. In March, in response to Western sanctions, including price caps on its oil and petroleum production, and to keep those curbs in place through June, but has now extended its pledged cuts through the end of the year. Things are about to get very tough. Now look at the reductions per country. Look at the kings. There's 1, 2, 3, 4, 5, 6, 7 here. Then you can't forget Russia. I don't think it's part of the OPEC Plus. Not sure. But Saudi Arabia to cut oil by 500,000 barrels per day. Kuwait to voluntarily cut oil production by 128,000 barrels per day. United Arab Emirates to reduce oil production by 144,000 barrels per day from May. Kazakhstan to contribute 78,000 barrels per day to OPEC Plus output cut. Iraq to cut 211,000 barrels a day. Algeria to cut 48,000 barrels a day. Oman to contribute 40,000 barrels a day to the OPEC production cut. They turned their back on Babylon. Now, of course, Russia had to chime in on this because they were the first ones assaulted by the sanctions of the petrodollar since the situation overseas. It said Russia commented on the announcement of production cuts. Today, the global oil market is going through a period of high volatility and unpredictability due to the ongoing banking crisis in the U.S. and Europe. Nailed it. Global economic uncertainty and unpredictable and short-sighted energy policy decisions. And there's where we're going into, is it really short-sighted decisions? or is it planned takedown? The Saudis said Ministry of Energy official emphasized that this is a precautionary measure aimed at supporting the stability of the oil market. And the market is now OPEC+. Brent futures are expected to rise this evening in response to today's news. Prices have been ranged between 86 and 73 a barrel for much of 2023. Again, I think it touched down to 72 and change one time. But let's go and just look. It's taken 30 minutes or so to put this together. Let's go back to CNBC. I haven't looked yet. Let's just look at where that is changing. Again, I'd seen it go up to 81, back to 80, but it was a time delay, and we saw 82 here. It's hanging about the same, 80.73. Again, closed out Friday at 75.55, and this is a 15-minute delay. So you can see this jump. This is a 5-day chart, and let me pull it down just a little. Right here was the announcement that, again, broke the camel's back right there. And that's where we're at, guys. Again, you may want to check and see if the oil or gas hadn't already jumped at your local station and fill up before we get any more surprises. We're watching it, guys. You watch it. I've got an important video coming up. Get it up tomorrow. I think you'll like it. It's a heads up. Be safe.